Welcome back to video number 4. Believe it or not, everything up to this point has been the introduction, the preparatory work before we actually get into sections 1 through 5. We got one or two more slides here before we get into the first section, but I think they're very important. Okay, now goal setting. This is going to be a very, very interesting exercise for you, whether you're experienced or not. It's going to really throw some cold water on your face, make you step back and say, wow, I didn't really understand that until now. I didn't really think about it that deeply until now. So here we go. Write down how much you want to earn over the next 12 months. Don't think about it. You should have, if you're at the point where you're watching these videos, you should have a pretty good idea of what you want to accomplish. You should have gone through either testing or books or seminar, whatever it happens to be. You should have a really good idea of, I know what I want to accomplish. Now write down that number. Just the first number that comes to your head, write it down. Okay? Now, based on your resources of capital, your market experience, your edge, and your current trading skill level, are you 100% sure that's the number you want? Okay. Now, I want you to double that number. Whatever number you wrote down, I want you to double it. You got some mixed emotions going. All right, well, why, how? If I could have picked that number first, I would have picked that number first. You know, that kind of stuff, right? Well, if you said, I can't do that, if you said no, if you picked a number that is not realistic, if you double that number, that simply means there's a gap between where you are now and where you could be. Okay? So now what we need to do is we need to write down what you believe you need from this course and any continuing education you get in the market to make the higher number possible. Now here's the interesting thing here. Let's say you're making $1,000 per day. Okay, let's say that's the number you wrote down. Let's say that's the number, whatever it happens to be. Do you believe somebody who is earning $2,000 a day knows twice as much as you? Now think about all the things that could go into making a trading decision and ultimately making money. What do you need to know right now to double that number and have the conviction that you could make it happen? Not just a belief, the conviction where you will attack the market every day and you'll say, I could make that happen because of this. Okay, if what you just wrote down is not what you have in your resource bases right now, that's what you need to focus on the most throughout this program. So as we get through part 1, part 2, all the way up to part 5, you right now just wrote down the most important stuff that you need to pay attention to from a core skill perspective and a core knowledge perspective. Okay? So now setting the stage for part 1 here, we're going to get into the basics of setting up what's actually going on in the market. So you have that baseline and experience set in place of what you need to accomplish. Now, this was actually took a while, believe it or not, to come up with the title of the slide, Core Knowledge and Street Smarts, because from the beginning, I had said before that we want to make sure that what you learn in the program is stuff you can actually use. So although the knowledge is what's necessary, it's actually, street smarts might not be the right way to word it, but I guess you could really put that into the context of how do you actually apply and give yourself the best chance of applying that core knowledge. That's probably the best way to word it. So it could be tempting to skip through this section. I don't recommend that at all. I recommend that you actually answer the questions, go through the drills, and write stuff down, because if you are starting on a faulty foundation where you're objectives, both long-term and short-term, do not match your current resources, and you don't proactively go and get the resources you need, whether it's more capital, more buying power, lower commissions, more experience, a coach, understanding how to read the markets better, understanding how to trade multiple positions better. If you don't gather all those resources to get you from the first number to the second number, it's going to be frustrating. But if you already know before you even start the rest of this program what you need right now to get to that second number, you're in a really solid position. So, section 1, setting the stage for successful professional active trading. We already covered. We're going to go over the long-term goals and what main challenges you might have, what short-term objectives you're going to have in pursuit. So again, think of short-term objectives as writing your trading plan, coming up with a game plan, managing good entries, managing the positions themselves, working the orders, working through probabilities, risk, and leverage prior to putting the trade on, and then getting into candlesticks. And we actually start to get into what's going on in the charts there. All right, so we're going to define, in my opinion, what street smarts are. Now, again, street smarts, in my opinion, are actually being able to apply what you know. That's the difference. Knowing something and doing is not the same thing. We all know how to lose weight. We all know how to save money, all of those kind of things. Doing it and knowing how to do it's not the same thing. So street smarts is you have experience, and in my opinion, experience means you've learned from your own engagement in something, whether it's working out, whether it's being on a diet, whether it's relationships, or whether it's being in the market. If you have experience, if you're smart and have experience, I should say, you've learned from what you went through. You have an understanding of what to do and what not to do. Again, if you we're talking about trading here, but if you think about relationships, that sure hits home. Next, honesty about your resources. One thing that I must have mentioned about 5 or 6 times already, and there's a reason. Most people mistakenly get into the business and believe their resources are only the amount of money they have to trade. That is not the case. A good coach could be one of your most valuable resources around, just for the fact that they can help you get through the learning curve inexpensively, as well as shorten the learning curve. They can help you be prepared. They can help you be disciplined. They can help you with flawless performance. They can help you with feedback. So gather all your resources and make sure that they are within the realm of your goals, which means you have to set realistic goals. Next, you have to define your goals and objectives. Remember, the goals and objectives are short-term versus long-term. Think strategically first, which simply means that you first need to decide what your edge is and how you are going to apply that edge. You are not looking first to see how much money you can make and where you're going to get in or get out. Next is self-analysis, and I will tell you flat out, it's very, very common for new traders to have a very sense of inflated image of their ability to come to the market and make money. I've seen probably at this point thousands of traders come to the market, some of them borderline arrogant and just not setting themselves up for success because they didn't take a step back and really get a grip on what they needed to know. So self-analysis is important. What's interesting there too is that a part of self-analysis is being able to ask for help. It's so important. If you can't ask for help, you're going to spend all of your money trying to figure it out on your own, and there's no reason to do that. There's so many other people that you can ask. All right, potential markets to trade. It's interesting. I mentioned commodities, forex, stock trading. In my opinion, stock trading is the easiest market to learn on, and the one that we're going to spend all of the focus on in this program. And I'm going to tell you why. It is much easier in the stock market to adjust your share size and your volatility to give you a chance to interact with the market on a real basis and manage your risk while you're learning. It's very, very important. And then finally, with Street Smarts is choosing a trading concept. And choosing a trading concept is really just a matter of what type of trading business are you going to run. Are you going to be scalping? Are you going to be trading momentum? Is it intraday position trading? Is it multi-day trading? Is it swing trading? Are you going to get your ideas technically? Are you going to get your technically meaning off the charts? Are you going to get your ideas based on news? Are you going to only be a news trader? Are you going to trade fundamental analysis, that kind of thing? Are you only going to trade earnings, that kind of stuff? So choosing a trading concept is essentially choosing what kind of business you want to open. Now, out of all of the parts of this definition of street smarts or learning and using your experience, I personally believe this one, honesty about your resources, and setting realistic goals are the two most important ones to focus on from the beginning. And I guess the question that you have to ask yourself when you pick that number before, and you said that's what I want to do, and then I said double that, and you have those thoughts going through your head. Whatever that number is, you have to ask yourself, why do I believe I can accomplish that number? What history do I have that tells me that's what I can do? So the more closer you get to living in the real world, and you say, this is what I'm bringing to this business, and this is what I want to accomplish, stretching it a little bit, but this is what I want to accomplish based on the resources I have, then you'll know what you need to focus on throughout the education. So in my opinion, honesty about where you're starting, and then setting aggressive but realistic goals based on where you come into. It's what you bring into the table. All right. All right. So what's required for success? First is accepting the fact that the money you're putting into your trading account is risk capital. If you are going to put money into a trading account for the first time and have the misguided belief that that money is going to be paying your rent in 3 months, I highly suggest you dial that thought process back. And again, I keep stressing trading for the long term. And when I mean trading for the long term, I'm talking about judging your results over the long term. So if you need money right away and you're judging every trade, it's not really risk capital at that point. It's capital that you need to pay your bills with. So be honest in assessing whether or not it's truly risk capital or not. Let's hope it is. Next is operating your trading account as a serious business. Now, that doesn't mean you have to go and incorporate or do it as an LLC. However, it does mean that you need to run it like it's a real business. You need to make appointments with yourself of something as simple as how much time are you going to make to write out a trading plan. Next is what time of day are you going to write out your game plan. So your trading plan is your strategic choices. Your game plan is actually, I'm going to go out now and scan for ideas, and this is the time of day I'm going to do it. Now, me personally, I do it on the sevens. I either do it at 7 o'clock in the morning, or I do it 7 o'clock at night. Now, there's a little bit of an advantage of doing it at 7 o'clock at night. You can pretty much do 95% of your game plan. These are this is what's going on in the market. These are the stocks that I want to trade. I want to be long these stocks. I want to be short selling these stocks. And then you go into your office, your trading room the next day, wherever it happens to be, and you look for any overnight news. You look for anything that might have changed the circumstances of the ideas that you wanted to trade. And then you can kind of tweak it if you want. The downside to doing it at 7, the whole thing from 7 o'clock in the morning, depending, obviously depending on your traveling and whatnot. If you're traveling to the office, and God forbid something happens on the way to the office, the subway gets stuck, you're stuck in traffic, whatever it happens to be, and you get to the office late, now you're kind of scrambling to come up with great ideas. You'd much rather be tweaking it and enjoying your morning coffee and whatever you have for your oatmeal for breakfast and your egg whites or whatever it happens to be, and tweaking a little bit than taking the chance that something might have happened on the way to work. So that's a little bit of mentoring advice that I think I'd give you. So next, strive for profits but manage risk first. This goes without saying. You first have to manage the downside in order to be around for the upside. You can't just go out and say, I'm going to go be a professional trader, take risk because I have a lot more money in my account than I can afford to lose it. Having money in your account and being able to afford to lose it is the dopiest business plan for a trader I've ever seen in my life, but I can't even tell you how many hundreds of traders are saying, I made a fortune in my other business. I don't care how much I lose trading. I love doing it. What kind of moron says that? But people actually say it. I guess the interesting part about it is that it's kind of like a badge that they wear, the fact that they could take that much risk and they've been so successful in other things. But look, if you really just want to throw money, put yourself on a fake account and keep the money. Don't do that. You should be striving first to understand how to manage the downside while you're learning to engage with the market long enough to strive to make profits. Okay? Never get emotional about a trade. This is a huge requirement for success, and I'm going to talk about it on two different sides of the trade. When I say emotion, I'm talking about, let's say, fear, greed, anger, that kind of thing. Let's actually talk about the greed part of it. Okay, and in a way that a lot of traders who have not traded won't really recognize this, but it absolutely happens. Let's say you just had a nice string of trades in a row where you've earned some money, and whether it's, let's say it's 5 days or 10 trading days, whatever it happens to be. Now you get into another trade and you're feeling good. You're feeling probably a little bit overconfident, and let's just say, for argument's sake, your normal dollar amount risk per trade is $500. There is a tendency when you're trading well because you just earned money to get a little slack in your discipline on losing trades following that because you just made money. Don't do that. Okay? You should risk money based on each individual trade and the dollar amount that you're willing to risk. Because you made money on previous trades should have nothing to do with being sloppier on the next trade or losing or allowing yourself to lose money on the next trade simply because you made money. You should be risking more on a trade because it's a better idea, not because you happen to make money on the prior trade. So sometimes you will be risking more, taking greater risk with more leverage and more positions because the potential for profit is greater and the odds of follow through are greater. So it's very, very important. Now the downside is if you're in a slump or if you're angry or if you have some personal stuff going on. Trading angry is a very, very dangerous one. You can definitely go on tilt in trading when things aren't working right and get emotional and allow yourself to lose a lot more than you've planned to lose. I mean, I could tell you some stories in my own trading as well as obviously managing other traders and speaking to people at seminars. Angry trading is the worst thing you can do because it is extremely, extremely expensive. So you either need somebody that you could rely on, who trades with you, a trading coach, a risk manager, whatever it happens to be. If you're having a bad streak and you feel like you're getting a little bit emotional on the downside, get away from the screen because it will keep money in your pocket by doing that. But yeah, again, these are all parts of learning and having that street smarts and experience and be like, you know what, I held that trade a little longer than I should have and I was pissed off and I can't allow myself to do that. It's real money. Okay, it's real money. All right, never traded with an opinion that will impede your judgment. There's something interesting. There's an opinion, and then there's a trading bias, and they might sound the same, but they're really not. In my vernacular, in my the way I would describe it, an opinion is a strongly held conviction that you most likely aren't going to change. A trading bias means that you believe something's going to happen based on probability. So when you have an opinion, sometimes it can be hard to change. If you have a bias, it's simply based on probability. So when I say don't trade with an opinion, you don't want to only see one side of the trade, and no matter what happens, if the trade moves against you, you allow it to continue to move against you because you believe your opinion is right. So in other words, you're a great technical analyst and it was the perfect bear flag, or whatever it happens to be. I guess the most drastic story of this that I've seen is, I want to say probably back in around 2006, where it was trading, at that time it was retail accounts. I wasn't really managing this particular person, but he was trading in this, and he knew somebody who owned a public company. And he kept buying the stock as it was going down. And started out at 21, went down to 18, and just over a period of about 6 to 8 months, it just kept going down. And he just kept saying, I know the stock, I know the company, I know the stock, I know the company. And this guy was a pretty sharp dude. He lost a lot of money having an opinion on that stock as opposed to paying attention what the directional bias was. So make sure that you learn the difference between an opinion and a bias based on probability. Take the time to develop and commit to a clear strategy. That goes without saying. We've talked about iterating, making feedback a part of your plan. Right from the very beginning, understanding that trade adjustments are a big part of it. So all of that goes into developing what you believe is a strategy. It must be crystal clear. It's interesting too. I'll tell you, the less clear your strategy is, the less clear your edge is, the harder it's going to be consistent, because you don't at that point have conviction about something happening over something else. So this kind of, again, an advanced thing. If you're trading and you're hesitating on an entry, hesitating on an exit, it simply means that your trading plan is not 100% clear and you don't believe in it. So one of those two things has to be worked on. So you have to only trade when you have an edge. And again, only trading when you have an edge goes back to that mindset of there's going to be losing trades. If you have losing trades, you want losing trades to happen on your best ideas, which gets into only trading in that. Now, reviewing trade results as feedback to improve. Again, very important and stuff you want to have in the notebook. You want to view results on a trade-by-trade, week-by-week basis to get feedback for improvement on your edge, your belief in your edge, and your ability to follow your trading plan and your game plan. But you want to judge those results over time to test the validity of and allow the validity of your probabilities of your game plan and your trading plan to follow through. Okay, now again, you're not going to change time frames. You're not going to. There's so many different things we're going to get into. You want to change one thing. If you're going to get feedback and tweak something, don't change everything at once, because then you have no idea what was working and what wasn't working. Very important. Now, the most important parts of this slide. First, we have business. Must treat it like a business. Another step to success is you must manage risk first. If you've bought the books Market Wizards or any trading book, every single one of those big traders profiled in those books, they all talk about how they blew up their account. They all talk about how they blew up their account because they didn't respect risk. They all talk about how they managed to build up a capital base and get started again and had a completely different healthy relationship with risk, and that is ultimately what allowed them to become the success that they were. Never get emotional about a trade is kind of never is probably a strong word there, because look, we're human. It's virtually impossible to not get emotion when money's tied onto the outcome. However, it is a goal that you have to strive for to be successful. I mean, I'll give you an extreme example of somebody that I know recently. Obviously, I'm not going to mention any names, but this particular guy is trading for well over 15 years, maybe even 18 years at this point. And even to this day, he still can't handle when he loses money. He basically has histrionics to the point where they had to put him in a different room. And he's the head trader of this particular trading floor. He's a super good guy, but after 18 years of trading, you still don't have a grip on your emotions. You got to work on that, man. So my point is, never is a strong word when you're dealing with emotions and money and all that kind of thing, but it is the goal. It is absolutely the goal, and you will be able to have emotional detachment when you're trading the right risk amount per trade. Now, actually, that's a good point to tie in there. Especially if you're a proprietary trader and you have a lot of money, you're going to set a certain dollar amount that you're willing to accept per trade. If you're trading emotional and you're taking losses and that really is getting to you, you're trading too big for what you can handle at that point or what you can afford to lose. So scale it back to get to the point where you can trade with indifference, where it's nothing more than a business expense. All right, we just discussed what opinion means. Developing and committing to a clear strategy. Developing a strategy and committing to it is not the same thing. Taking the time to work on it is one thing. Committing to it and only trading that is a gigantic thing. Okay, so only trading it when you have an edge is a big deal. Now, I'll give you an example. We're going to talk about it a little bit later. You have a stock that's in a very bullish environment. It's going up, and today it happens to be trading down. What do you do? What do you do? What's in your game plan? What's in your trading plan? How do you handle a stock that's trading against your edge, even though it is a stock that was in your game plan? We're going to discuss that as well. All right. Next, results as feedback to improve. I've spoken to traders in the past that tell me they don't have time when they're trading to write in their journal. Again, I'll be very to the point on this. That is just flat out dopey. Your trading plan is your own personal book of how you can be successful and how you can eliminate what's not working. Write in a journal. Okay? Actually, I said I was going to mention a third book. This book is a tremendous, tremendous book. It's actually got absolutely nothing to do with trading, but it is a very, very good book on developing what they call a growth mindset versus a fixed mindset. And the reason I feel so strongly that it's related to trading is you could literally take the concepts in the book where a fixed mindset essentially means that you have an opinion and you're not going to change that opinion based on no matter what happens. You're not going to change it. That's your mindset is fixed. Versus you have a growth mindset where you choose to learn from everything that happens. And even though it's not a trading book, it is a perfect trading book when you have that thought process, when you have that mindset to basically say, I am going to learn from every single thing I do when I trade. And you will exponentially increase your ability to learn and your skill level and be able to process core knowledge much, much, much quicker than somebody who's got a fixed mindset and is not learning from anything. Now, you know what the extreme example of this is that is interesting is stockbrokers. I've traded with quite a few stockbrokers who believed they were money manager geniuses by what they made for their clients. What they did not realize was they had absolutely no attachment to the outcome of when a trade moved against somebody. And then when they started to trade themselves and it became their own risk capital that they were up or down or that kind of thing, all of the natural emotional stuff that I'm helping you work through before we start trading together, came to fruition, and most of them found it quite frustrating to be a trader because now it was real money to them as opposed to just money in somebody else's account. But if you can get to the point where you're trading where you're trading the right risk amount and you don't get emotional about it, you're in a good spot. So that book Mindset is a phenomenal book to really explain that concept of fixed mindset versus growth. And when I read that book and I translated that into trading and learning from every single action and every single trade that I make in the market, it became a huge learning tool for me in my trading. All right, so long-term goals, thinking strategically. How are you going to personally identify low-risk ideas with acceptable profit potential? Acceptable is going to be a big word that I'm going to bring up quite often, and it's very important because having risk prior to a trade and accepting the risk is not the same thing. And the easiest way I always explain is it's always the same way. Have you ever moved a stop loss? Have you ever been in a position your stock trades down to the area where you're supposed to get out of the trade? You're like, okay, gets down to that price level. I'm getting out. I'm going to kick it out and moved it. Or you move it down at you move it a dime, or you move it 50 cents, or you pull it completely, and now you don't even have a stop loss in the market. If you do that, which we've all done it, anybody who's been an active trader for any period of time and tells you they haven't done that, they're full of beans, okay? Everybody's done it at some point. Now, if you do that, I am telling you flat out, prior to the trade, you did not accept the dollar amount could be at risk. So in other words, you're going to say to yourself, as a business owner, I am okay with putting this money at risk because if I happen to not make money, it's nothing more than a business expense to run my long-term probability business that I'm running. That is a gigantic thing that is going to save you money. All right, so solid understanding of how to manage money. Again, long-term strategic thinking. You need to understand managing money as a business means that you are now a risk manager. After you put that trade on, prior to putting the trade on, you're a probability guru. You're looking to come up with probabilities for good ideas, but after you're in the trade, you're now managing that risk and leverage as a part of your business. You are a risk manager. If I was to place a help wanted ad, it'd be risk manager. All right, so another long-term goal, the opportunity to ask those who are further down the trader path for advice. You want to network, you want to have a mentor, you want to have a coach. It's invaluable. You know what's interesting too is, it's very common for somebody to say, I don't want to pay for a coach or I don't want to pay for a mentor, but then they'll go out and a good coach or mentor you can pay anywhere from $300 to $500 to somebody who's really expensive, maybe $1,000 a month. So let's figure $12,000 for the year, but let's keep it on the normal side. Let's say it's $300 a month. It's not worth one trade to be able to talk to somebody to help you get further down the trading path to get to the point where you can visualize yourself as a professional and you're actually stepping into that reality. All right? Being able to ask experienced traders how they overcame something. How do I trade bigger? How do I bounce back from that loss? What did I miss that I didn't trade bigger? It's worth its weight in gold. I used to joke around all the time in one of the first offices that I managed. I would say, look, I could point out 8 different people in the room who are making money. You know they're making money. How about you send them an email and say, I want to buy you pizza tomorrow. If you don't mind, I'll pick your brain. It'll cost you $5 at lunchtime pizza to go and get all of that experience that person paid for. So long-term goals is develop a network of people you can rely on to ask questions. Next, define the outcome you imagine that trading to be. So, again, the beginning of this video, we talked about pick a number, now double that number. Video prior to that, I said, can you visualize, can you imagine yourself a millionaire according to Napoleon Hill? I said, can you imagine yourself a professional trader? Well, what does that look like to you? Why do you want to trade? What is the desire? What is the want deep inside of you that makes you want to trade? And this might sound like some stuff you'd like to gloss over, but let me ask you something. When you're having a bad day, when things aren't going perfectly, you need a powerful why to get you up off of your seat to say, enough, I'm not going to feel sorry for myself. I committed to do this because I want this really, really bad. Write it down right now. Why do you want to trade? For me personally, again, I told you a little while back that my background, I was an entrepreneur for 25 years, and I actually had some retail places. I had a deli, a pizzeria, I did real estate and all that kind of stuff. And for anybody who's been in retail for a while, the public, after a while, working all those long hours and whatnot, sometimes it can wear on you a little bit. So my goal, the reason I wanted to trade was, we could talk about all the money that you could possibly make as that's all relative. That wasn't really my goal. My goal was I wanted to be an entrepreneur, but I didn't want to work nights, weekends, holidays, and I didn't want to deal with the public, quite honestly, at that point, which was, quite a bit of time. So that was my why. My why was I wanted to be an entrepreneur. I wanted to be in control of how much money I made. I wanted to work really hard, and I didn't, I wanted to have a normal life. At one point, I remember literally looking out the window of the front store on a Sunday afternoon, feeling like I was in a fishbowl and everybody else was allowed to have a real life. So I was using a little bit of negative motivation there too. I didn't want that for myself anymore. It's also interesting too. I'm sure you guys have read Anthony Robbins and Awaken the Giant Within and Unlimited Power and whatnot. He talks about pain and pleasure. And you can use both sides of that pain and pleasure. What do you want to move towards and what do you want to move away from? They're not always the same thing, but you can use motivations the same way. It sounds like I don't want. Well, I don't want is a pretty powerful motivation, and that could help you to take the right action steps, but it's not the same thing as what I do want. And the way I can explain that is I don't want to be fat versus I want to be healthy. They sound like the same thing, but they're not. Okay, I don't want to lose money versus I want to make money. They're not the same thing. Okay, and there's different steps and different thought processes to get you to where you want to be. So here's the point of this. You need a really, really strong reason why to pull you through when there's going to be some adversity, which I guarantee you there will be. Trading will challenge you. You need that why to pull you through, pull you up by your bootstraps and say, I made a commitment to this. I am going to make this happen because of this reason. What is your reason why? Next, what do you enjoy when you're trading? It's very interesting. Some people love doing charts and hours and hours and hours of charts. Some people like getting in, getting out, getting in, getting out, getting in, getting out. Some people can't stand getting in, getting out, getting in, getting it out. They just want to put positions on and hold them through the first 90 minutes of the day and then reevaluate. Some people like to hold to the close. They don't want to watch every uptick and downtick. Some people feel like they can't live without every uptick and downtick. Some traders love reading the news. Me personally, I'm not a news trader. I don't like doing it. I think that there's just so much dissemination of different opinions right now. I'd much rather let the news come out and settle in. So you need to know what you enjoy and make sure that the part of the business that you're running is the one that you enjoy doing. Because if you hate doing it, you're not going to be successful at it, trust me. All right, so again, these are all goals. You can imagine yourself, again, close your eyes, step into it 12 months from now. What part of this stuff am I doing that I'm really into? What is my reason why? How much do I really enjoy trading? What do I enjoy about trading? What type of trader do you want to be? very often this is different from what you think after you've done some planning. And again, very, very common, the difference between scalping and being a momentum trader. Scalping, you're in, you're out, you're in, you're out. You're keeping all of your losses very, very tight because you don't like to see a red number on your screen. But the other side of that is you're booking profits really soon. So you're not making bigger trades, but you're making a lot of smaller ones, and you have to be really disciplined. So that's deciding on the type of trade. I mean, then maybe you try that, maybe you hate it. You're like, what am I doing? I don't want to be banging the keys all day. It's giving me a headache. So you'll adjust to it. So again, we've talked around right from the beginning about feedback and getting better and learning, and all of this is the process of pivoting into becoming fully imagining what kind of trader you want to be, taking that into a real market, paying attention to what's going on, writing in your journal, finding somebody who can help you to be the coach, to be the trader you want to be, and then ultimately fulfilling that desire. Next, long-term goals. The first number and the second number. What skills are needed for you to succeed in the long term? Do you need to be a better chartist? Do you need to place your orders better? Do you need to understand how to be direct access order router better? In direct access trading, you get to a point where you can actually route your orders and get paid versus route your orders and paying for it. Learning how to do that properly. If you're at a prop firm especially and you're actually getting ECN rebates, you could knock your cost down dramatically. There's dark pools. There's other ways of routing. Maybe you need to learn how to hold good trades longer. Maybe you need to learn how to build an argument for a good trade. What skills are needed after you master the core knowledge? How do you plan to improve those skills? Again, you're going to get a coach, or you're going to videotape yourself. I will tell you this, which is kind of interesting. If you can get some video recording software. Now, writing down in your journal, absolutely the way to go, absolutely stuff you need to do. But if you can go and do some sort of screen capture where you actually pull up the stocks that you traded that day and give your thoughts into what happened that day, you go back and watch it a month later. It's really a fascinating thing to both, number one, be proud of how much you might have improved, where you can see some mistakes that you maybe made a couple of months ago. And then the opposite is that you really start to get angry and use that negative motivation when you see yourself making the same mistakes over and over again. So both sides of that equation is important. And how do you plan to develop the skills that you don't have right now? So how do you plan to improve them? And then ultimately, how do you plan to develop them? So there's stuff you already have that you need to get better at, and then there's stuff that you don't have right now. You need to figure out what core knowledge will lead to developing that skill. So we did a pretty good job, I think, before of knocking out everything of what could possibly be core knowledge first. All right, so main challenges to overcome in Pursuit. Now, this is where my experience and the other people who help put the programs together come in handy. We'll give you a little bit of a window into what you're going to encounter, and then ultimately, hopefully, get you to the point where we can help you work through them. Number one, desire to be further along than your resources. I covered this in a lot of detail. We're going to talk about what those resources are now. Time to learn. Time to give a system enough trades to assess the edge, time to develop a plan, time to develop a game plan. Okay, these are all symptoms of somebody who wants to be further along than where you are now. Resources of risk capital and leverage. You're going to wish that you could risk more. You're going to wish that you had more leverage. Sometimes there's too little leverage. Sometimes there's too little capital. And the same thing with too much. And believe it or not, we'll talk in a second about what it means to have too much leverage. Pursuit, an obstacle in pursuit, education. Absolutely blows my mind how many people come to the market and start risking money with none or very, very little education. And like I said before, one of the biggest blind spots that people have coming to the market is if they were massively successful at something else, they just believe they're coming to the market, learning the basics, if they even do that, and getting involved in the market. Just by working hard, they're going to be successful. Again, I'll tell you, I said it 55 times already. Working hard is not the only ingredient to success. Nobody worked harder than I do. It was when I started to pay attention to what was working and what didn't work, that's when I started to turn the corner and started to really have a strategy and learn how to be consistent. All right, so not continuing your education. You'd be like, what the heck do I need to learn after I learn everything I need to know about how many different ways is there to look at a chart? Let me ask you something. How'd you like to go to a doctor who hasn't had continuing education or hasn't updated his skills in the last 15 years? How about an accountant? Would you like to go to an accountant that hasn't looked at new tax laws? Think about that for a second. You need continuing education. Okay, period. What did I just tell the story I just told you about an experienced trader who is losing his mind on losing days after 18 years. That guy needs to learn something. I don't care how much money he's making. He's out of control. Okay, somebody 18 years into the business needs continuing education to learn the last part, which we have now in section 5. Again, super guy. We'd all like to have the amount of money he has, but he's a heart attack waiting to happen. All right, and again, being further along, no advice from a coach or a mentor. How about the wrong education? You're not getting relevant training for what you want to accomplish, or maybe somebody teaches you a style that just doesn't mesh with you. I spoke about it in a previous video where I talked about you'll start to trade, and a challenge that you're going to have is you're going to be trading something that doesn't match what you want to accomplish. And I actually have a real world story about that. When I first started trading, things were in fractions, and there was a style of trading called rebate trading, and there were actually a lot of people making a really, really good living doing it. Which was essentially placing very large orders on ECNs, and you get paid to place those orders by the people that own the ECN. But you were really just trading to get in and out at the same price. If you made money, it was great. So just to give you an example, you would make $100 if you got filled on the bid, and then you'd offer it out, and if you got filled, you'd make another $100. Even if you got in and out at the same price, you made $200. I know for those of you that aren't experienced with direct access trading, it might sound kind of weird getting in and out the same price and actually making money, but it was a viable business for a really, really long time. It was getting filled on the executions to provide liquidity. But me personally, I just didn't. To me, it just wasn't a long-term business model. I mean, we were basing the business on an execution strategy as opposed to actually learning how to trade the market and figure out what was going on to make educated decisions. And again, it just wasn't for me. So I was the wrong style for me personally at that time. So that was a challenge for me. And I actually did that for a year because there was so many people around me making money. I'm like, what's going on? If you're trading at a prop firm, or if you're trading with friends and that kind of stuff, or getting advice from friends, in the long run, a challenge is going to be trading the wrong style. You might find somebody else making money. They might be taking too much risk. I mean, I know a doctor right now who is an active swing trader, but the losses, or the paper losses that he withstands are very, very poor business judgment, but he justifies it because the market's in a raging bull market right now. And when I say raging, it's relative in this point of 2014. We're having very, very few relevant pullbacks or significant pullbacks. So the market is bailing him out, but his trading style is completely wrong. So he's going to find that a challenge if and when the market rolls over. All right, so another challenge in the long run is experience. It's hard to have conviction without a track record. It's hard to have conviction without a history of actual trades. And why is that a challenge? Well, quite honestly, it's a challenge because you need to develop conviction and confidence, and the only way to have conviction and confidence is to actually trade. All right, so further along in here, I want to make sure that we're on the same page with why these challenges are going to rear their head to you. You want to make money. Look, let's face it, we're all coming to the market to make money, but there's that emotional factor that you want to be further along, especially if people around you are making money. You might hear somebody who's been trading for 10 years sitting next to you and be like, oh, I nailed it. I made 3,000 today, 5,000 yesterday, lost 1,000 the day before, but made 4,000. You're going to want to be like them. You want to mimic good disciplines of trading rules. But you need to be around a little bit to gravitate towards what's right for you. So the whole point of this is fight the desire to be further along than your resources, because you don't know if the guy next to you is a trust fund baby where he could lose no matter what, and it looks exciting and that kind of thing. You don't know if he's got somebody sitting next to you who's got a hangover and that kind of stuff. Fight it and trade within your resources. Push yourself to get better. Push yourself to be better the next time you trade, but do it within your resources. Fight the desire to be further along. I'm going to talk a little bit here about too much leverage. This is really more geared towards somebody who is a proprietary trader who could potentially, let's just say for argument's sake, put $5,000 into your trading account after you get licenses, and then the next day you could have, let's say, $100,000 in buying power. Too much leverage in too short of a period of time can be very, very dangerous, because it's that old, again, we'll get to a cliche, it's a double-edged sword, where if you are not prepared to trade with more leverage, as much money as you could possibly make, because you have that extra leverage, there's a downside if you don't know what you're doing. So those paper cuts become a lot more than paper cuts. All right, so the downside of too much leverage is in the context of being further along. Don't trade more leverage until your P&L, your profit and loss statement, justifies it, because you have a track record of making money. All right, so we're going to just review the stuff there. The time to learn, time to give a system enough trades to assess the edge, time to develop a plan, a trading plan there specifically, time to build a game plan. And actually, game planning is interesting, because you need to learn how to write a game plan. So what's going to happen, and we're going to go over this quite a bit, you're going to get to the point where you're starting to put stocks into your list, and you can be like, that one, yeah, maybe, that kind of thing. That takes time to make that right call of which stocks should go into your game plan for the next day or for that trading day. You might ultimately have, on a first initial scan, maybe you'll have 25 stocks that might fit the criteria. Then you want to cull that down, maybe have 10 stocks going into the next day. It's separating those, from 10 to 25 and pulling out the 15 that are mediocre ideas that take a little bit of a while to learn how to game plan. So give yourself a chance to learn how to assess the best ideas. Now, this is interesting. If you have a giant alarm clock in your head, okay, if you have something in your head that says, I need to learn, I don't have time, this 6-month alarm clock is going off, I already have in my mind 6 months from now I'm going to be paying my bills for my trading, okay? The less time you have to accomplish each one of those 4 components, the greater your need is to narrow your focus. So in other words, just run a particular type of business. Maybe only trade long. Maybe only trade 5 different stocks. Maybe only trade the first 2 hours and the last 2 hours of the day. The more focused you are, the easier it's going to be for you to control that environment and master that environment, and then you can get bigger. And I'm going to give you probably one of the best examples that is a real-world example in relation to this. Facebook started out with just college students. Facebook did not start out to conquer the world. If you start out to be the biggest thing to everybody on the planet, which is the equivalent of you trying to open up a trading business that is trying to do everything, you're going to have everything mean nothing, because you have no focus. So while you're in that period where there's, you hear that clock ticking in your head, your need to focus is very, very important, and you need to ask a lot of questions and keep a detailed journal. And only you know how strong that clock is in your head. And again, ask yourself honestly, do I have that 6-month clock in my head? Then I need to focus and I need to ask questions. Write that down. All right, so defining the choices you have when making your plan. So right now, we're going to walk you through all the different ways of defining your edge, but we're going to bring up the questions now. What is your edge? How do you define it? What's the concept you're trading that you feel you're going to earn money on? Okay, now what is your edge? How do you define a probability? How do you define something's going to happen versus it's not going to happen? If a stock bounces and has a really fast move to the upside the last hour, is that an edge to you? Well, that's not an edge to me. To me, that's just what happened just now. What's the bigger part of the money that went into that idea? So defining your edge is very important, and I've said it before, the less clear your edge is, the more you are going to hesitate, which is going to make it very difficult to be consistent. So I'll ask you right now, what is your edge? Do you have one? Before I start to explain some edges to you in another video, what is yours right now? Another strategic choice you have to define, how much money do you have personally? Yeah, it's a tough question. Yeah, sometimes you're not going to answer this honestly, but you know what? How much can you afford to lose or invest in your trading business? How much money are you putting into your business to be successful? Ask it honestly. Are you expecting to put $4,000 into a trading account and start paying your mortgage 3 months later? That is going to be very difficult to do. And I'm going to tell you why it's going to be very difficult to do. Every trade is going to matter to you. Every uptick, every downtick. Every uptick, it's going to matter the world to you. Okay? You want to avoid this situation. This includes capital to trade and living expenses. Whatever number months you think that you need to learn how to trade, I highly recommend you push that number out further. All right, how much can you afford to risk on each trade, each day, week, and month? So let's say you have a bad trade. What's your stop loss on an individual trade? How much you're willing to risk each trade? How much you're willing to risk each day if you're having a bad day? What happens if that happens at 20 minutes after the market opens? You put on two trades that immediately move against you. You did everything you were supposed to do, but you still got stopped out for the day. Do you call your risk manager and say, you know what, do me a favor, Joe, I'll take you out to coffee later. Can you put me back on? That kind of very common among prop traders. How much can you afford to risk, and do you accept that risk? Another long-term strategic choice: how much do you need to earn each year? Do you need to earn all of that from trading? I will tell you this. It is infinitely easier to learn how to trade, or at the very least to take the stress off of yourself, if you have your bills paid, or if you're working another part-time job, or whatever it happens to be, or you have a significant other who pays the bills. It could be a woman who's trading and a husband is paying the bills, or vice versa. It doesn't make a difference. How much do you need to earn each year? And then reverse engineer that. Now ask yourself, is it realistic based on your resources to achieve those goals? If it is, great. If it's not, how do you have to adjust what you plan to do, both in trading and outside of trading, to learn how to become a trader, to ultimately get to the point where it's paying your bills? And what if you don't make enough from trading to live off of? What are your contingency plans, and when will you take action on this? And again, I've said this repeatedly, okay? This includes capital to trade and your living expenses. So if you don't earn enough, what do you plan to do? And at what point do you say, I need to make a decision on this? I'll tell you flat out, most traders make this decision far too late. They do it, they have 1 month of money left in the bank and that kind of thing. It will always be longer than you expect. If you think it's going to be 6 months, make it 9 months. If you think it's going to be 3 months, make it 6 months. Whatever it happens to be, strategically, to take all the pressure off of yourself, give yourself a time frame to get feedback, to improve. All right, so what are the shorter term goals and objectives? Can you make more money than if you need to live off of, so that your trading capital can grow? So in other words, let's say you have $5,000 in your account, and one thing leads to another, and you earn $5,000. Do you need to take all $5,000 out, or can you take out $2,000, leave in $3,000, so now you have $8,000 as trading capital, or do you have to constantly take $5,000 out every month? Can you make that happen? Based on the above, are you being realistic, or do you anticipate trading like a seasoned professional from the start? I think that you can get the sense there that I'm being a little bit sarcastic. So why do you think I spend so much time so far on being realistic and being honest and putting a real assessment on where you're at? I want you to put yourself in the best position to trade within your resources to reach your long-term goals. So I'm telling you now, if you're just getting started, the key for your long-term success, to give yourself the best chance, is to be honest about the amount of money it's going to take. I've seen trader after trader after trader, literally hundreds of traders, who thought they were going to start making money right away. And it's great if you can do that. It's just not the norm. So to believe you're going to be a seasoned professional right out of the gate and make money and start living on it is a tough thing to believe there's actually going to happen. Okay? All right, so how are you going to educate yourself after you've been trading your system? That's very, very important. How are you going to know if your system makes sense? Well, obviously your P&L will be one way, but you can always speak to another experienced trader. So in setting goals for yourself, as you start to interact with the market, you're going to start to learn those questions that we had asked before. What do you need to know? What skills do you currently have? What education do you currently have? What education do you need? So you're going to set yourself up with, okay, I need to learn how to do that better. It could be placing automated stop losses. It could, for me personally, after a while, it became trading multiple positions. How do I learn how to educate myself to trade multiple positions? That kind of stuff. How much do you expect to make as a percentage of your trading capital? For prop traders, this is actually interesting. Like I said before, it's common to have a $5,000 risk deposit with your prop firm, and then ultimately get many, many multiples of buying power on top of that. So what do you expect to make? Do you expect to put $5,000 into an account and make $5,000 every month? So that means you plan on making 100% per month. Per month. Let that sink in a little bit. Even though you're trading a much bigger number, it's 100% on the amount that you put in. So what's a realistic number? What's a good number within your resources, within the risk that you can take? Set a goal. What's a real number? What risk level are you willing to accept to achieve that? How much are you willing to risk to achieve your goals based on the capital you have in your account plus your experience? What's the largest drawdown you're willing to accept? And how will you know if your plan is working or not? So these are all questions that you must answer on I would say not so much on a daily basis, but definitely on a weekly and monthly basis, both asking yourself and then ultimately asking a mentor. Now, all of these questions are goals that need to be answered. Can you? Okay, if you can or you can't, how do you do it? All those kind of things. You could do some of this on reflecting on your own. Print out this page. All right, so some of the skills needed to succeed. We talked about goals. Now we're going to talk about some of the skills to get to the point of achieving each of those things we just discussed. But you know what? This is actually 1 hour into the video. Let's pick this up on the next video.